Okay, welcome to Ahead of the Curve series number 2. For this particular series, we are going to take a look at US steel trade. Actually, this trade we execute this trade way back in January, and in fact, it took quite a while for this trade to hit profit. So I'm just going to show you the trade itself, the post itself. So you can see here trade setup US steel. This was actually posted on the January of 7. So if we look at the trading view link, right? If you click on it, it will bring you straight into the trading view link. So for those who are not familiar with Patreon, right, you can actually click on some of the images. Okay, it's a bit laggy, but never mind. I already got the link open here lah. Okay, so the trade setup went something like this. So this is actually on the day of the trade setup itself, which is the January 7th. So for this trade, right, you will see that it's actually a breakout trade. There's a support somewhere around this area here, about $16 there, US dollar. But of course, we do not want to place the stop loss right at the $16 level. We want to give it a bit of buffer. So what happened was around 15.5 like that lah, the stop loss. And not only there's a entry at the current price, the closing price of the candle, right? So we will always whenever there's a trade setup, right? I will always take the current price, the price that the stock is at the next market day lah. So that's how I trade. But of course, you can see that there is a second entry option at the lower end. So one of the question that a lot of new trader especially like to ask is which one should I take? What should I do when there is a second entry? And within this particular case study here, we will explore the how we should go about when there is a second possible option. If you look at the description at the below, there's a note there say very wide SL, very wide stop loss. Very wide stop loss means the stop loss is set very far from the first entry, the current price. So the current price is at that time it is like at 21.34, but the stop loss is actually at $15, 15.5. So it's about $6 down, which is considered quite wide lah. So whenever there's a wide stop loss, right, I would recommend second entry. There will always be a second entry coming up because should the price retrace back lower, right, you want to get the second entry inside there also. Okay, so if I press the play button, the price will play all the way until its current price right now lah. Okay, so here there are a few interesting things. The price barely hit the stop loss, but it didn't hit lah, but barely hit. Suppose if my stop loss is right at this support here, right, you are going to hit with the stop loss already. Hence, this is a very good example of why you should never place the stop loss right at the support. And secondly, because it retraced all the way back down to the support, right, it actually hit the lower entry level also, and then it eventually rally back up, and you will see that what you will see for this US steel trade, right, price didn't hit the TP level at 27.7 lah, but actually on this day, right, I post out in Patreon for those who were around during this time. It's actually on 31st March. I actually post a message in Patreon saying that I am going to TP on US Steel ready regardless of the price. So I personally TP lah. I'm not sure about the rest. And for me, right, for me personally, this is the only trade in 2021 that I prematurely TP. I prematurely exited instead of hitting the TP. There are no other trade that I does that. There were actually a lot of trade that almost hit the TP level, but it came back down. I did not exit. This was the only trade that I exited. Later, I will explain to you why did I do that. But of course, for the rest of you all who are following my trade setup, right, I have no idea how disciplined you are in following my levels lah. So that is up 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 to the trader who is following lah. But just know that for this particular trade, it's the only trade that I prematurely TP. And that's the reason why I am using this trade as a one of the example in this series also, because sometimes I do bend certain rule a bit, but very rare, probably like 0.1% of the time. But of course, you can only start bending the rule once you have mastered the rule. If you don't know, if you have not mastered the rule yet, right, you go and anyhow bend here, bend there, end up you will have a very bad trading experience also. Okay, so let's go into detail of the trade setup. So you can see here, this is the United Steel. So I actually rewind the price back to the day of the trade setup, which is actually 6 Jan. You can see here already, the candle is at 6 Jan. So let's sort of move forward and let a few candle runs, okay? Okay, so the first entry is actually somewhere around here, 21 point something lah. But to show you the actual entry price, right? You can actually see for US Steel, right? My close position here. My close position, US Steel actually contribute the highest profit at $5,000. And what you will realize is that I still have position open in US Steel because I did not TP fully. I did not take profit fully. I will always leave a bit behind. So this is a TP strategy that Nimbus Capital uses, and unfortunately for the newer folks, right, this TP strategy is not available to the Patreon public, mainly because it is taught only in the 3-month course, and it requires a lot of discipline and a lot of coaching for you to get this strategy right. If you do not do it right, if you do not have someone watching you perform this TP strategy right, you are going to end up losing a lot of money rather than making a lot of profit lah. So US Steel actually contribute to the biggest portion of my profit lah. And you can see here that the open position is still relatively strong at 1.5K, around that level lah. Okay, so the initial entry that I took, wait, let me go and find what was my initial entry. The initial entry that I took was at 20.8 on the 7 or 8 Jan, somewhere here, 20.8. Okay, somewhere lower. Because although the entry price is there, right, the actual price that you get to enter maybe will differ a bit lah, because sometimes the order didn't go through lah, you are not awake at the market hour lah, those kind of things. So my actual entry is somewhere about 20.8 like that. But for the purpose of this scenario, I put it at 21.33 lah, which is the original one that is given here. The original one was 21.34. Okay, so after this particular entry, right, now the thing here that you have to notice is whenever there is a possibility of a lower entry price, right, at the moment of your entry, you need to already decide if you are going to take that second entry, because that will determine your risk. If you are going to take that second entry, right, perhaps you might want to lower the risk on your original entry. But of course, personally for me, right, my risk for all my position is 2%. 2% risk per position, meaning every time I hit the stop loss, right, I am going to lose 2% of my portfolio. So at this stage, right, my portfolio is actually about 100,000 SGD. If you convert to USD, it's probably around 70,000 USD lah. So when I enter the first trade here, you can see that this was my first entry. My risk is 2.0%, which is based on USD 70,000. So with that, I calculated my entry price was 21.33. I'm following here as an example, not the actual entry price that I have. And the total number of share I can buy is 240. So let's say if the price go down to hit the stop loss, if the price go down to hit the stop loss at 15.5, right, then I am going to lose 2% of my total portfolio lah. So as the price move, right, you can see that it actually comes back down and it hit the stop loss. Not stop loss, the second entry. So the thing is, when it hit the second entry, I did not immediately buy. Because Number one thing you have to know about the second point is that you do not want to buy when the price is coming down. At least you will want to see some kind of a bullish candle coming up first. Like you don't buy on the way down, but you buy on the way back up. Okay, so that's the most important part if you are dealing with second entry. So price continue to go down, go down, go down, and you see there's a gap down here that is almost hitting the stop loss. And at this point, right, I believe a lot of people panic and they cut their loss even though haven't hit the stop loss yet. So there's a reason why the stop loss is there in the first place. So you have to be extremely disciplined in following my stop loss. My entire strategy is choosing a proper stop loss rather than entry. So I think this rule is something that a lot of Nimbus Capital veteran, those who have been around, will know already lah. So I will not go through so much. But my second entry came at this candle, this green candle. So here, right, you will notice a few things. Number one, this support is actually established. This support is established. It is established by this rebound here, this particular rebound here. And not only that, right, at this point where there's the price gap down, right, you can see there's a sudden surge in the volume. Not only that, when the candle rebounded from support here, there's also another surge in volume. So I actually bought it on the way back up, because if you buy it anywhere along the way, right, it can continue to hit your stop loss if it goes back down. But here, right, it came back up, so I actually had my second entry at 18.14. But the interesting thing here is that when I bought the first entry at 21.33, I actually entered 2% risk. So that is I hit my total risk per position already lah. But when I enter at the lower end, right, I entered another position with 2% risk also. So actually for this particular trade, I am risking a total of 4%, in total 4%, because if both entry hit my stop loss, right, I am going to lose 4% of my total entire capital. Okay, so when I enter at the second entry, you can see that my lot sizing is slightly different. For the second entry, same thing, the risk is 2%, but the number of share jumped to 600. The original is 240. Even though the risk is the same, right, how come the number of share I have jumped by so much, about 3 times? This is mainly because now the price is lower. The distance from my entry to the stop loss is much tighter compared to the original distance. So if this distance is very wide, right, I have to account for that by playing very small shares, so that when it eventually hit, right, I am not hit with a huge loss lah. But let's say now that the price have gone down, right, I am able to buy a lot more volume with the same level of risk. So I actually got another 600 share at this level, which you can see somewhere here. I have 240 shares here. Then the second entry is somewhere right here, 600 shares there at 18.14. So on this position alone, I am risking a total of 4%. This is also the one and only time in 2021 that I broke another one of my own rule, which is in total, I only risk a maximum of 3% per position in a particular counter lah. So in a way, you can sort of try to be technical and try to reason that actually these are 2 positions. So I am still risking 2% per position lah. But for me, right, I consider this as a breaking of the law lah, mainly because I'm now risking 4% in the same stock, because I don't treat them as separate, because if one is hit with the stop loss, right, the other one is also going to be hit with the stop loss as well. So I lump them together as the same trade. So this is once again another one and only time where I broke the rule also. But I did broke the rule with a very strong reason, mainly because like I said, we have a very strong established support with this volume and this doji candle here. Not only that, we rebound from the support, sort of establishing that this is a support with a very bullish candle and quite a spike in the volume on somewhere here. So that is why I decided to, okay, I can risk it lah. Then eventually we are able to sort of the price start to recover back. And if you notice, right, even though price start to recover, when it reached somewhere around here, right, it dipped back again. Okay, so when it dipped back, right, it is very important that we stick to our trade plan. We don't go and panic and go and like do funny thing lah. But somewhere around here, right? Oh, sorry. Oh, okay. So this is the point that so the original TP is actually 27.71, but you can see that on this candle, right, we didn't hit the TP. We are barely sort of a bit short of the TP. Then I TP the next day at the opening price somewhere around 25.7. So the actual TP price is the price that I TP is 25.7 lah. So if you look at it, right, if you combine my first entry and second entry together, the average price of my US Steel is actually around 19.05. The reason why it is much lower and not at the middle is because I actually have a lot more volume at the lower end due to the fact that it is much closer to the stop loss lah. So hence you will see that it is way lower. And when we eventually hit the sort of ITP here, right? The reason why ITP here prematurely TP for this is because number one, I broke the first rule already. I broke the first rule that instead of 3% per risk, right? I'm taking 4% per risk because I have 840 shares that I'm holding for a very, very long time in US Steel. It is actually taking up a lot of my capital because I broke the initial law in the first place. The consequence was that I have too much capital stuck here, and now that price sort of barely missed the TP, right? I decided that okay, since I already broke the rule the first time, and now I am stuck. I am stuck with a lot of money in this account, right? I probably should just TP anyway because my profit is quite I would say respectable amount already. So if you look at the trade in total, right, the total risk that I took was $1,004, 2% risk because the capital is $70,000, 2% will be $1,004. So I have two entry of $1,004 risk, which comes to about $2,800 risk lah. So in total, the profit that I make, if I were to sell everything at the TP price, right, I will actually make $5,700. So the risk to profit reward ratio is now actually double lah, about two like that lah, the risk reward ratio. But of course, if you see somewhere here, right, if you see my close position, my profit is only around $5,000 there because I still have the open position, a bit of the open position right here. So whenever you have a second entry, right, this is actually what you should not be doing. But how you can go about whenever there's a second entry is number one, right, at the point of you making the first entry, right? Sorry, let me clear this. At the point where you make the first entry, you should already decide whether you want the second entry or not. If you want the second entry, right, how you should go about is you take half the risk. Meaning now normally I'm taking 2% per risk, right? If I decided that okay, I want the second entry, I'm only going to enter 1% risk. Meaning instead of the 240 shares, right? Oh, it disappeared. Never mind. I think I removed all the drawing already. Instead of the 240 shares, you should only be taking 120 shares. So eventually, when price come back down here and hit your second entry level, right, you go in with the second 1% risk. So with both entry combined, right, you are still taking the same amount of risk that how you would normally take when you have one position lah. So that's how you deal with second having two entry level. And another thing is you should never take the second entry on its way down. You should take it only when it start to come up. So the question here is, how do I know whether on its way down or whether is it coming up? Number one, it is case by case basis. Number two, unfortunately, this is not the answer you would like. It comes from experience. You need to have enough experience to determine whether is it really you turning or not. But of course, whether is you turn or doesn't you turn, whether the price can continue to hit the TP, that's the future we do not know. But at least you should have if you want to truly know whether it's you turning, right, it does come from experience lah, and you need to trade this kind of setup multiple times in order for you to get that kind of, I would say, the decision making capability lah. But suppose you don't have experience, you don't know anything, right? Do not take the second entry when you see a big red candle that suddenly hit the second entry level. Do not take that big red candle, but rather wait for the green candle to come back up and then you take it. So that's the number one thing you need to take note about taking the second entry. So we covered two very important points. Number one, decide whether you want the second entry or not, then you halve your risk. So now the issue with that approach is, what if you take half the risk here and then price doesn't come back down? Price doesn't come back down, but it goes straight up and then it hit your TP. Then good lord, you got the entry ready ma, and then you hit the TP. Then you should not be complaining ready lah, because it is the decision that you have made. As the result of that decision, right? There are a lot of consequences. There will be consequences. You cannot expect to be able to have a decision that you get the best of both worlds. There will be certain consequences that you have to face based on what decision that you take. So another potential question that one might ask is, can I don't take the first entry level now? Can I wait for the price to come back down to the second entry level? Can you do that? Yes, you can definitely do that. But if you do that, right, you will run into a few additional challenges. Number one, you need to put this counter in your watch list, and you need to monitor every day whether the stock come down to the second entry and then it U-turn back out or not. But of course, the advantage of this is that because you are entering the entire position here, right? Not like a bit half here and half here, right? You are entering the entire position here. You will be able to buy a lot more share, because you are now taking only one position at a very low price compared to where the stop loss is. Because of this, right, your reward ratio will be extremely high. You will be able to get a lot more profit compared to, let's say, you half. But the disadvantage is, what if it doesn't go down at all? What if you wait but doesn't go down but go and hit the TP? If that's the case, right, you didn't even have the half position there, you missed the entire trade. So there is a lot of pros and cons. So if you follow what I did, right, you enter the entire 2% risk, and then at the lower end you enter another 2% risk, right? Then US still is I will say it's an example that things goes okay lah. But what happens if you are faced with where things doesn't go okay, where the whole thing hits stop loss? Then you'll be hit with a 4% loss, which is twice as much as how much you are going to risk normally lah. So when you are trading, right, there is no easy answer. There are certain ways you can do about certain things, but behind all these choices and decisions, right, there will be consequences. So you will always need to live with the consequence. There's no best of both worlds. So if you have choice of two entry, right, the most balanced option that you can take, the most balanced option that I can recommend you is take half the risk. So if it went up to if it goes up and hit the TP, right, good for you lor, you got a bit of profit. If it come back down to hit the TP, then good for you, you get a lot more profit compared to the first scenario lah. And let's say if it doesn't hit TP, go all the way down, right, then good for you also, you only lose your original amount, and you are not losing like the twice the amount that you are going to be risking lah. So this approach is relatively balanced, and most of the time you will be able to get a more consistent result lah, rather than taking the two extreme. The two extreme is entering everything here or waiting for the price to come down and entering everything here, or you risk two times that what you are risking, enter everything here, and then after that you enter everything here again. So compared to this three option, right, the original option where you take half the risk and then wait for the other half at the bottom, right, it is much more better. But the thing is, you have to know, not every trade is going to have that second lower entry level. The second lower entry level is only there if the stop loss is very far from the current price. If the stop loss is very close by, right, there is no point in you making the second entry at a lower price also, because price doesn't drop so much anyway. While you make that price is like there's no difference like that lah. So that's the end of this particular series for US Steel, and I do hope this give you some insight on how to deal with two entries lah. Okay. So now the floor will be open to questions. So does any one of you have any question before I end this session? I'll give about 10 minutes lah. If you have any question, you can type it up. You have not exit US Steel, so what should be the TP1? If you have not existed, right, then you stick to the TP1 level lor. TP is a very tricky thing. TP is a very tricky thing. So you can still stick to the TP1 level there lah. Any more questions? Okay, so since there are no questions, right, I'll be ending this session, and this video will be uploaded into Patreon. Thank you very much.